China has suspended $10 billion worth of goods, causing a 47% disruption in the flow of goods between the US and China. This not only causes car prices and iPhones to soar, but also makes shipping costs skyrocket. Can American consumers handle these changes in the global supply chain? The supply chain is facing significant shocks, with the aviation and automotive industries being hit the hardest. Boeing, a symbol of American aviation, has suspended 84 orders worth $28.4 billion. This not only causes massive financial losses, but also directly affects key international contracts, diminishing the US's competitiveness in the aviation market. But it's not just Boeing. The automotive industry is also struggling. The Ford Mustang Mach-E has raised prices by $1,200, while Stellantis has increased the cost of their plug-in hybrid cars by up to 7%. The shortage of parts and production delays are disrupting the assembly lines, and the cost of making cars is only going to increase. These changes mean consumers will have to pay more for the products they love, and many may not be able to afford them. On April 19, 2025, China suspended $10 billion of goods at the Shanghai ports, causing a 47% congestion in the flow of goods between the US and China. The impact of this disruption is spreading across the global supply chain, from the electronics industry to the automobile sector. iPhone deliveries, a popular consumer item, may be delayed by up to 2 months. Furthermore, car prices could rise by an additional $2,000 due to the shortage of parts and products. The rise in goods prices is creating a spending crisis for American consumers, with everything becoming more expensive. This shift is pushing the economy into an unstable position, with the cost of living climbing and showing no signs of slowing down. China's ports have been facing severe congestion, with 47% of the goods unable to leave the docks. This has forced producers to cancel or alter their existing contracts. This situation is causing a series of consequences, increasing shipping costs and making it difficult to determine product pricing. Shipping container costs from China to the US have surged by 250%. And this cost increase is not only hitting large businesses, but also pushing consumers into a difficult spot. Shipping companies and manufacturers are struggling to maintain stability in an environment full of risk and constantly changing prices. In light of supply chain issues and rising production costs, Tesla and Toyota have decided to shift some production to Mexico and Berlin. However, this is not an easy fix. While it may reduce dependence on Chinese ports, it comes with higher production costs and production delays. American automakers are not only facing increased costs, but also struggling to maintain production stability as the global supply chain becomes increasingly unreliable. American consumers will face continued price hikes for cars due to rising production and transportation costs. However, manufacturers can't provide stable products, leading to a shortage in the automobile market and uncertainty about prices. Major companies like Tesla and Toyota are not only shifting production to Mexico and Berlin, but also looking to expand into new markets to reduce reliance on China. But this is no easy task. Mexico and Southeast Asian countries have lower labor costs, but lack the infrastructure and production capacity of China. This will lead to higher production costs and add complexity to supply chain management. Nonetheless, this shift could create opportunities for developing countries like Mexico, Vietnam, and India to expand manufacturing and attract companies moving their supply chains.